Welcome everybody to another session on TopstepTV. This is London, so we're going to see what this week is going to bring to us. We do have some rollovers on the cards, so we're going to have crude oil rolling over, we're going to have ES and the other equities rolling over. So it might be the week to heed some caution. Now, if you're here for the first time, my name is Deeyana Angelo. I've been trading futures for almost 12 years now, and I have actually been trading for nearly 17 years when I first started dabbling in trading back in 2007. So yeah, let's have a look at what the week brings. Now I'm just going to clean some of this up so we can actually look at the larger time frames and some relevant levels. We're going to start on crude oil, which is my main product. I specialize in crude oil and metals, but I also trade ES every once in a while. All right, so we have a bounce from a demand area. Let me just line up some of my charting software over here. Okay. So last week we were talking about 65s potentially being an area that I was looking for. Well, we got down to 65.32. Throughout the week I was also talking about 70s being an interesting area, as well as intraday levels that was 60, 67, 87. All of those came into play, so it was a decent week. But this week it's probably going to be a little bit more muted because of the rollover. Now, what is the rollover? It is a time of the month or the year when the product rolls to the next front month. Whenever that's happening, it's going to be choppy, it's going to be uncommitted, lots of fake outs, and it happens because there's a split in volume from the old contract. So now everybody's trying to migrate to the new contract, but it's not like any set time or day when that particularly happens until the expiration, right? And then everybody has to roll. But until such time, it tends to be like, oh, maybe we should trade this contract, maybe we should trade that contract. And it splits the volume between the two. So therefore, there's not enough push in any sort of a way to kind of go either side. So I will be very careful this week. We do have the FOMC rate decision, which is probably going to cause quite a lot of bounciness. However, it's always prudent to be cautious on rollover weeks, especially because in equities it doesn't happen that often. In my products it happens every month. You know, we have crude oil and gold rolling literally every single month, so it's less of an event, but there's still that one week where everything is a little bit difficult. So, you know, I'm going to try and not to, you know, do like 10 trades a day and stuff. I'm just going to try and look for very good opportunities. And it's not a bad idea to implement see money, take money strategies this week because of that. So let me have a look at some actual levels here now. I'm just going to clean up the chart so that we can start fresh. These are some intraday levels. Now, yes, last week I also had the weekly range low that came in at 66.50, or it was like 66 or something, and it literally had dipped below it and then started going away from it. So maybe that's something to look at as well. I'm going to have a look at where that falls this week, although it might be a little bit early. Okay, so the weekly range low falls at 66.42 at the moment, and then the weekly range high is all the way up at 71.78. So that's something of interest. That's like an overall sort of swing area to look out for. So let's say that's okay. 71.78. There we go. Okay, so let's see what's going on the daily chart. I mean, on the daily chart, we are kind of sitting in an overhead supply here. The problem with crude oil is that we do have some macro fundamental stuff coming into the whole pricing. For example, China's economy not doing very well. Now, why would Chinese economy be important? It's because it accounts for 15% of crude oil demand, like world's demand. So naturally, if the demand for crude oil is not as high, there is nothing for the prices to kind of keep shooting up. But on the other side, we have had the hurricane. We've had some refineries that were shutting down production, then they were reopening production. That was like in Libya. So it was all just a little bit messy. And but as a whole, it looks like the supply of crude oil is not where it should be. But also the demand is not where it should be either. So we're kind of in a bit of a no man's land here. And you will have intraday levels that are, working out, and you will still have some movement. But the fact that we have problems on both sides, it could cause even more trouble for the rollover, right? So even more possibility of this week not being that exciting in crude oil. And of course, anything can happen. I mean, we've seen quite a lot of volatility from crude oil, and dare I say it, I think it's back to where it used to be. This is how oil should react to things. Like we should have about 250, 300 pips per session, especially for NYMEX. And we are there. Like I'm just looking at my average session ranges. We have now climbed up to about 200 ticks for NYMEX on average. So that's very good, right? At least that's come back. There's also another thing about crude oil where we have these new bi-weekly options in crude oil that started running in July, end of July. So it's fairly new, and they expire on Tuesdays and Thursdays. Now, if we go down to look at some of the isolated days, some of the more bouncy days are going to be Thursdays. And so here we go. This was the 10th, and then this was the 12th. So this is Tuesday and Thursday. So notice how Tuesday and Thursdays, this is the daily chart, they have a bigger range, right? They have bigger candles, and that's probably why those new options flows are, they're making an impact. So Tuesdays and Thursdays might be the days when you want to look for those more kind of semi-swing intraday moves, whereas Mondays tend to be muted, Wednesdays tend to be muted, even though we have the inventories, and Fridays were kind of a bit of a non-event. So yeah, but there's still movement to be had, so not to be sniffed at. Just be mindful that there are some new developments in crude oil that could be causing some slightly different mechanistic action underneath. Before these new option expiries, I used to look at the Canadian dollar options, and then I would look at which of the levels had more details, more there's a new version of Topstep X, so hold on. I'll do it later because I don't want things to mess up. I don't know whether it's going to delete my levels here. So I'm going to refresh later. So before I used to look at Canadian dollar options, and then I used to convert them to crude oil. And then I used to plot them on the chart, and they were like my intraday levels of interest, because those levels can make a big difference. They act as magnets or as sort of bounce areas. So we can definitely use them to make better trading decisions intraday. But yeah, for this morning, I'm not looking to, I'm not looking to rush into any positions. So I'm going to stay patient. However, we're going to look at some areas of interest and all of that. So let's go down to an intraday time frame because I want to see what Asia did. All right, so we have Asia high at 69.35. So let's move this. just where we are. We actually already had that stop run takeout of Asia high. And then we have Asia low at 68.65. Okay, let's do another line. 68.65, there we go. Now, why are these levels important? Because very frequently, if you look at how crude oil is behaving here, we do these stop runs through previous session highs and lows, and this happens when NYMEX opens as well. So if you were trading London, whatever, and then NYMEX opens, it's not a bad idea to mark both London high, London low, as well as initial balance high, initial balance low. That's the first hour of trading. And then you use those as reference areas, right? And stop runs through those levels are very frequent. That's something that market makers are always doing. So it's very good to have those on the chart as sort of high probability failure areas. So initial balance high is up here, and I'm gonna do a rectangle. Usually I like to do a yellow rectangle where my initial balance is. There we go. Maybe make that a little bit more transparent if I can. Can I make it transparent? I'm not sure I can actually. I'm just looking. I don't see any opacity. Okay, let's do this in another way. Maybe if I make it like this and then, oh, here we go. Okay, there we go. This is better. So that's now the initial balance. So as you can see, we're still inside the initial balance. And let me see where we are from the previous week. We're opening below London from Friday. And we're kind of trying to accept into the London value area. London value low is at 69.42. We're trying to go inside it, but on the first run through, not only do we have a stop run through Asia high, we also rejected the value low. So I'm going to put another line here. Now, usually I have obviously a charting thing that does all this for me, so this is what I'm doing. I'm looking at another thing. You know how Hogue has T4? Well, I obviously have another charting thing that is helping me out. So this is value low. Now, if we accept value with some confidence, there could be a long there, but again, it is rollover week, so I'm not too crazy to do anything before I get maybe a failed auction somewhere. That would be a good idea. I do have a level around 69.50 that might be a level of interest, but I still need to see an actual setup from that level. And just gonna grab something here. Yeah, there's a lot of areas where from the option flows where the levels are kind of evenly distributed. That never really spells an easy day, because you have so many areas that are within about 25 ticks of each other. Usually when you have the gamma exposure levels, you want to see like nice big space from one to the other level. And the way it's looking today, it's all just like 69.25, 69.50, 69.78, 70. It's like there's not enough room to really run things very long. So yeah, this is going to be like see money, take money for me today, definitely, at least in crude oil. So let's see what this crude oil does around the Asia high and that value area high as well. All right, let's see if we've got any questions. How do we use COT for crude oil? You know what? I feel that COT is way too late for any intraday plays. Maybe if you're a swing trader and you have like no time constraint and stuff, every time I see COT, oh, they've cut net exposure of like, short positions. By the time that comes in, we've like done 40 trades in a week, right? So I don't feel that report is particularly useful for intraday. But if you are kind of investing in the sector and you are maybe looking to position yourself in crude oil for some longer term purposes, you might look at positioning with whatever the net added positions were, right? So, for example, if we've trimmed short positions, which I can imagine they have, with the fairly violent move up, you may want to look at some ETFs on crude oil and just plow your money in there, because these prices are fairly low for crude oil, like historically, if you look at just like as a historical mean. And it's it's one of those tools that I just don't find it very useful intraday. And I've even spoken about this to Hogue, like over the years. I was like, oh, how would you use the COT report? And he's like, I don't. So, and I looked at it high and wide because, you used to hear a lot of stuff from when you're working in a prop firm, they have all of these services and stuff, and they're like, oh, COT, the net positions. But, they're not telling me anything that I don't know already. It's like, did we go into a recovery? Yes. Did I say that in my previous weekly plan on my own YouTube channel? Yes. Did I give you the levels? Yes. So, why would I need to stare at COT when I can see that we were at some interesting levels, the recovery happened, here we are, right? I don't need COT to tell me that we've trimmed some net short positioning. It's like, yes. Yarden says, hey Dee, I'm trying to mark average session range and average daily range. Now, I use Blautic DR. This is my software. Obviously, I have a software development company, and I use it on AMP Futures MetaTrader 5, so I don't need to calculate it myself anymore because I have a team that does that for me. So literally, I just go, where is that today? Are we moving up, down? And the indicator will recalculate the levels that are dynamically calculated in order for me to get the average session ranges. So average session ranges are it's my concept. It's effectively, it's nothing like, groundbreaking, but at the time I was an intraday trader and the only level of measure was the average daily range. But then I had a lot of the days where crude oil went into an abnormal positioning and smashed through the average daily range. So I was like, well, now what? But clearly at some point it would still reverse. And me being a contrarian and a mean reversion trader, by design, I do other things as well. But, naturally I would look to reverse the position or to look for fade of the move. Not every time, but it just depends on the context. On most days you will have some sort of fade. So it's like, how do I, find something that makes sense? And then I was staring at the ADR and I went, hold on a minute. So we work on the premise that the value areas are only calculated on the session that we're trading at. So why not take the same thing and why don't I just start plotting time series data in an Excel spreadsheet and then find my effectively regular trading hours average range? And over the years, I kind of coined the term average session range because that's what it is. It's an average session range. And now with Coach Ray, because Coach Ray is one of my early market stalkers, he's actually held a Topstep funded account for 4 years. I don't know, how many people know that, but Coach Paul was talking about that. And he came to me for coaching in 2019. We worked together for over a year, and very quickly, actually, within 3 months, he just turned everything around. So one of the levels that he uses is the average session range. He learned it from me. So the average session ranges are definitely very reactive intraday, and half of the levels that I'm giving you intraday on crude oil, they will be partly average session ranges. So without the Blautic DR indicator, which you can find on the marketplace in MetaTrader, I used to use Excel spreadsheets. So if you want to, battle with that, I would export the time series data, and then I would take the 30-minute candles, And you know, I would effectively just get the average of the previous 10 to 14 days, depends on, you know, what I'm trying to achieve, and obviously what sort of a week you've had, because if it's a much bigger week, then you have to smooth it out with a bigger number, so 20 to 40 days maybe, but for the most part 10 to 14 days is what most people use. And then you would look at where the price opens, and as it makes a new session high or session low, you will add it or subtract it from the average number until one side is exhausted. So it is a dynamic measure. It is not a static measure. So you can't just go, we've opened here, let me just plot 200 ticks above, 200 ticks below. That's not the average session range. That's probably R1 or something. It is not the average range. Average range is always taken as a dynamic measure from highs and lows, right? So I just wanted to make that clear. But if you want to make things easier for yourself, you can do the, you know, Blatek DR if you want to have a separate charting package. And maybe if you already have an AMP Futures account, you know, a lot of people do. So that would be an option to not have to do any work yourself. You know, it's a fairly cheap product. It's not like it's going to break the bank. And you can just save yourself a lot of trouble. So, yeah, it's much easier since I've done that, because I don't have to spend 2 hours exporting the time series. Like, this is what I think indicators should be doing, rather than showing you whether it's a buy or sell. It's an automation tool always, so that you don't have to do extra drawing yourself and stuff. It just streamlines your process so that you don't have to do boring things. But you know, some people want to have an indicator show them the way. For me, indicators of any kind are just contextual tools that, you know, might be fairly good to maybe show you the idea of what could be happening. Like, for example, I can see that now we're above some EMAs, but am I going to take them as a level? No, because I have more accurate levels, right? So I have, for shorts, I have this value low from London that is an interest for shorts. That would match the macro picture as well. I would like to see a failed auction there, though. We don't have that yet. And again, if a failed auction appears, then I will have a very good level of 49.57 as a reference point, rather than, you know, some VWAPs and EMAs that are much lower down. So I could get, you know, an earlier entry just by looking at price action, right? So that's how I like to look at it. I'm always uncomfortable when I'm going into trades that are based off lagging indicators. It never really matched my thinking. I always want to know contextually and price action wise exactly what's happening, and to try and get an entry that's as early as possible into the setup that would make sense within the context. All right, let's take a look at gold while we're here, because I know many of you like to trade it. Gold reached an all-time high last week. I was not very happy with it because it looked messy, right? It looked like it was stuck in a range. So we've now finally broken out of that range, and we can have a look at it from a more sensible level. I do need to grab some options data for that, so just give me a chance, because I've literally just sat down, I had my coffee, and I think I'm still battling with some sort of a cold or something, so I actually woke up a little bit later, so just scrambling to get things done. So let me just have a look here. What do I want? I want options, yeah, okay. And I'm gonna have a slurp of coffee. All right, so here is the gamma. All right, so I do have a level down at 2600. I'm going to drag out the GC chart. I just need another set of levels here. just to make the read a little bit easier. Here we are. Okay. What is going on here? For some reason, I'm getting an error in one of my platforms here. All right, so I don't really have too many levels to the upside. I really don't. Let's have a look at GC. Because we're at all-time highs, there's like nothing to back this up. So if I look at the daily chart, it's just going up, right? So one area that you may want to look at is the previous day's high as a potential further bounce point. I do have some level at a level and a demand at 2600s, which is a little lower. So 2600s could be an area of interest. And then we're also going to have a look at the Asia high, Asia low to see whether we can have some clues from there. But for now, I'm not really that interested in shorting because we had the reaccumulation and then yet another all-time high. So that's bullish, obviously. You know, no need to overcomplicate things and go, oh, should we go short? Like, yeah, you go short when there's evidence for it, but you certainly don't go short when a product is making an all-time high, because that would just be crazy. If my lighting changed here, one of my dogs just opened the shutters because he likes to look out and he's learned how to open shutters. So now I have a whole bunch of daylight sleeping into my studio. Thanks, Bernard. Yeah, so gold, very bullish. Some levels further down. But if we're looking at it from some intraday levels, previous day high at right around here, 2614, you would expect to see some bounce there. And then we're going to have Asia high. I mean, we've already kind of moved away from it. So Asia high is 2617.5. Let's go down to the 30-minute chart. $26.17.5. Just before London started trading. So it's up high there. So I'm going to mark that. And you will see that frequently, like gold hasn't done this yet, but frequently what they like to do is to take out either Asia high or Asia low and then to reverse. That's typically the first sort of scalpy type trade of the day, if you can get it. And to the downside, we have the Globex low at 2605.5. Okay, that's very close to that gamma level that I've got as an area of interest. I'm just going to change the color of this, because I like to put red when it's you know, it's something that I might want to take advantage of. It sort of gives more weight to the level when I have a red line there. It's like pay attention, D. And you will notice that the way I mark my levels, they look like sort of like code variables, because I find them just easier to deal with visually. Because like London low, London high, Asia low. It's like, to me, it just makes more sense. So yeah, I know it may look a bit weird to some people, but that's how I like to to do things. Now, if we manage to go below 2600, let's kind of say that we're going to have some kind of a nice pullback that might allow us an entry into the long. Really, ideally, I would like to see 2581 all the way down to 2575 that I have as sort of like a chop zone area. And chop zone, I will say why. Well, because that's kind of where we had all of this nonsense happening. So anytime you run into a demand area or into a supply area to the upside, you're going to have a potential for a chop zone. So even if they decide to kind of go through that area, it's going to cause some time to go by before they decide what they want to do with it. Sometimes it's faster, but most of the time when you have a balance area that we broke out of, if we go back there, you're also going to have some time that the price is going to spend there. So that's what I would be looking for. I would be looking for some chop sort of between 2600 and then all the way down to 2575 area. So, it is a bigger area, but that's what I have. And just by the way that this kind of crawled upside after a little break, it was very slow, very choppy. And then, London opened, and even before the break, it was just so slow. It was just up, doji, down, wicks, down. It's like, come on, man. This is why I didn't want to trade it. So I was waiting for the resolution of the balance. We have it now. So now if we get a pullback, that would definitely be something to look out for on gold. So if anything, I think gold is probably going to be the more interesting product this week. We don't have the rollover in gold. This is a December contract. So until the expiry of this contract, I don't think they're going to roll. And gold typically does these jumps. It's based on delivery requirements of the actual product. So, if they know there's going to be a lot of, let's say, Christmas presents where a lot of people buy jewelry for their loved ones and stuff, obviously you're going to have a huge demand for gold delivery around about December period. So this is one of the reasons why gold actually goes into these kind of odd jumps. Some people will be like, well, gold should be rolling every month. Why are we already in December? And this happened in June. They're like, what's happening? Well, that's why, because, there's not a lot of demand for gold around particular months. And then they sort of just jump to the times of the year when they know they're going to have more need for gold. And usually people who buy gold, they will be, things like jewelry stores and stuff. So they will be effectively short cash, meaning that they need to buy the product before they can make the goods that they make to deliver to their customers. All right. Benny Solis says, are you a pro trader, Deeyana? Well, take a guess, man. I am on TopstepTV, and, I'm one of their funded traders. But yes, I've been trading professionally since 2013. Now we're kind of all studying for Series 3, but I actually already held a qualification called the IAD Level 4, which is kind of the equivalent of first year of being a chartered accountant, like sort of a CTA thing. So it's actually a tougher exam, and as I was kind of going through the book, I'm like, this is just like the derivative section of the level 4 that I did before. So it's nothing new, but yes, I have been trading professionally, and crude oil has been my bread and butter for many, many years. Yes, would be the answer to that. Now, your question, the second part of the question, would you say it's realistic to add 2.5% per week? No. No. On a 100K account. So if you have a 100K account, in order to get 2.5% per week, you would need to risk a lot. Like, these are not... So the way you look at prop accounts, the reason why they are called 150K, 50K, is because they have the leverage equivalent best 4.5K of drawdown. What happened with my connection? Are we still out? Hold on, something weird happened here. Can everybody see me? Because I've just gotten some weird thing that my OBS disconnected. But I don't think that it affected anything. Yeah, okay, I think we're good. Just hate it when there's something something off. Okay, so yeah, if you are trading a true 100K account, even there, aiming for 2.5% per week is ludicrous, right? Many people who have 6 and 7 figure accounts, they won't be that aggressive with it because that's usually the only capital that they have, right? It's a lot of money for a lot of people. So if you get money from, I don't know, either inheritance or, sale of another property or something, and then you're like, okay, now let me put that as my trading capital, right? That is the working capital. You're not going to be risking like 1 and 2% in order to have a net 2.5% at the end of the week, because it's not like that. We call that trader math, right? Oh, if I make 2.5% per week, is that like realistic? It's trader math. First of all, you can't bank on making anything because you have no idea how you're going to perform. And for the most part, even if you are a professional, profitable trader, there are months where you're just not profitable. It's either the markets are slow or the markets have changed. A lot of you guys are momentum traders. Well, guess what? At some point, momentum is going to run out. We've had years. When I first started looking at equities as a prop trader, momentum was nowhere to be seen in equities, man. It was just terrible. ES was moving 16 ticks in a day, in an entire day. 16 ticks was the range, and NQ wasn't that far off. It was moving only during like the earnings season, but everything else was just like really, really painful. So when I first started working for a firm, they were like, "Oh, do you want to trade equities? Want to trade ES?" And I was like, "No." Definitely not. So I gravitated towards the more volatile products at that time, which was crude oil, right? This year, to kind of, give you an interesting outlook of how the market states work, this year, for 8 months, my main product, crude oil, completely died a death. We had 70 to 90 ticks per day for like weeks and weeks and weeks and then. Now we seem to be back, but as a result, I've had 8 months of not being able to use my main product because it's just not moving, right? It's just how it is. So I had to wait it out or to find something else. So this year I've been looking at other products. I've been learning a lot about other products that I have not really touched for a very long time for a very good reason. And now I'm back to crude oil. So very happy with that. But you can't control market states, and banking on market states to constantly be the same, and that you'll never have a losing week, and then you're always going to shoot for a very, very ambitious target of 2.5% per week. I mean, look at this. Hedge funds deal with a lot of money. What kind of returns are hedge funds achieving per month? It's not 8%. If it's 8%, you're among the top 5 hedge funds in the world. If you can manage anywhere from 2 to 4% on your own kind of 100K true cash, that's excellent return per month, right? On my personal account, I never aim to risk more than 0.3% per position. 0.3%. And over there, the returns that I get are usually in the ballpark between 4 to 6% per month, right? However, prop firms do allow us to size up a bit more, right? So rather than using 0.3%, I might use up to 4% of the drawdown that they give us. So the drawdown is the initial amount that they give you, right? But these are not, they are true 150K accounts by the leverage that they give you, but not by the drawdown. You don't have 150K to blow, right? You have 4.5K to start with that you then need to build up. Okay, but the leverage they give you, it's not the same as you putting your own 4.5K into an account and expecting that you can trade 3 NQ contracts because you won't have the margin for it. So this is where the quoted 150K equivalent nominal value of the account comes in, right? So just want to make that perfectly clear that if you put 4.5K into your own account and you try to trade 3, 4, 5, 15 NQ contracts, the brokerage is going to go, No can do, not enough money, right? But the prop firms allow us to get in with bigger size and to be a bit more aggressive. Why? Because these days you're not going to get kicked out of the prop firm because you blew an account. You just try again, right? So that's kind of led to a lot more opportunities, a lot more swings at the bat, right? So to try and get your career off the ground. But still, if you have a true 100K account Aiming for 8% per month is ludicrously aggressive. So if that's if you're not able to have multiple 100K attempts at it, I would really suggest that you be super, super conservative with that money. If you have multi-millions and if blowing 100K, 200K, 500K is not a big deal for you, go for it, okay? Just go for it because you're in a different position to the rest of the people. However, just by the fact that you're asking me about returns, it makes me think that you're probably not in that situation, okay? So yeah, it will be down to realistic expectations. So don't be unrealistic. This is one of the toughest jobs in the world. And you're up against yourself. So don't do the trader math thing. Just do day by day. Do not think about long-term goals and dreaming and wishful thinking. You don't know how you're going to do. You don't know whether the consistency, most people are like, oh, I've seen profits for 1 week. Let's open up a hedge fund. It's like, why don't you stay consistent for a year? Then maybe you can think about opening up hedge funds. So we call that trader math, right? When you have a very good week and then you extrapolate with no losses how much money you're going to get. If that's like the money that you now have. It's not that linear, right? You can have great weeks. And let me tell you, there was a guy that I worked with for 7 years. He was amazingly profitable, right? Amazing. Probably one of the top traders in the firm. And then he had a child and decided to work remotely. That was the first year that he actually had a losing year. He made no money. There was no money, okay? And, things change. Our personal circumstances change. The markets change. The markets we have now are not the same that we had even 3 weeks ago, okay? We had a very quiet crude oil. Now we have a very bouncy crude oil. Very happy about that. But if you look at the previous 8 months, and if you're a new trader going, oh, crude oil is very slow, which is what I've heard from my colleagues even on Topstep, and I'm like, but crude oil is not normally slow. We're just in a rut this year. Just you wait. And here we are. So now everybody's like looking over the fence when equities are kind of slowing down a little bit. And, they go into rollover. They're like, oh, we should have traded crude oil. So now everybody wants to trade crude oil because crude oil was where the party was. But that's my experience with crude oil. Then over the last 12 years that I've traded crude oil, most days, apart from a few isolated weeks, and actually another election year, we had crude oil doing 250, 300 ticks per day, and then COVID came, and then it was doing 600 to 1,000 ticks per day. It went completely nuts, and then they had to stop trading in crude oil because futures went negative. So that was new as well. So, every year can bring a new thing into the mix. This is a game of never-ending self-discovery, self-improvement, and you just can't bank on trading gains to be so consistent that you can extrapolate percentage based how much you can make in a month and whether that's something you can live off. Like trading to me should always be an add-on to all the other things. Like if you have some long-term investments, if you have, ideally another source of income, and then you also do day trading, then it's a beautiful exercise because it's like you get more money. If you don't, doesn't matter. It just makes everything so much more palatable, so to speak. So yeah, not realistic to aim for those kind of returns, definitely. Desmond says, D, gold is bullish again at this level, 26.14. Would you be a buyer? I don't want to sell gold, right? I'm just looking for pullbacks to buy gold. That is the whole thing. I'm not going to be a seller at this area. However, there is a setup that I like to look at, which is basically a takeout of Asia high and then a reversal, but in the light of all-time highs, and then we've done a reaccumulation and then another leg up. That means it's a low probability setup. So therefore, I don't touch it. I just basically look for a pullback. If we kind of fall away from the all-time highs and then we start messing around somewhere away from it, let's say that we dip below this gamma exposure level 2600s and then we hit it again, I may consider selling there. But selling at all-time highs, like I'm not, I'm not that much of a contrarian. So I want to see a pullback and then to have a level where we may want to become buyers again. But I'm not going to be a seller here. Definitely not. Brishti says, what are the courses you took to become professional? I didn't take a course. I took a program that at the end of it had the funded account, right? So it was a lot of cash, and it was in Chicago. I think the firm is not really trading anymore. And when I was there, they already had like some issues. But on the flip side, they did teach me profile. They taught me another way to look at the markets. And then I basically went through 2 months of studies of what the futures are, and to kind of set the scene for what they were wanting from us. And they didn't really want people from professional backgrounds of economy, finance and stuff. They were looking for people from slightly odd backgrounds. So, for example, I was a musician before then, pretty high-level session musician, but I've never done finance before. However, I have traded my own account for 5 years, but I was a forex trader and a swing trader. I wanted to go into intraday and into trading futures, so that's why I went. And that's when we all had like mentors. We all had senior traders who were sort of there to help us out. And very quickly, I managed to match up the stuff that I was doing as a swing trader. And I translated it into futures and kept developing it, which is how I came up with Market Stalker's method. So that is my methodology that I trade now. It's based on a mishmash of a couple of things. Time of day being a big component to it, which I don't think many people pay attention to, but I pay attention to it because there are certain things like options expiries at a particular time of day when you expect a lot of volume to come in. And for the most part, once those options are exercised, you have reversal areas. So things like that are, very mechanistic and very much based around are we at the major options level? Are we at a major supply? Are we actually anywhere that this trade could actually make sense? And then I pair all of that up with the TPO profile and the actual setup from the profile that I might be seeing. Like, for example, a failed auction or a sustained auction, or maybe a neutral day where I need to wait for the edges because it's a range-bound setup, right? So all of that led to me kind of developing my skills in maybe a slightly faster way. But then I also felt that profile was missing some stuff. And I felt that some of the ideas were maybe outdated because I kept looking at some of the stuff that they were talking about, and I'm like, but that's just not really happened. Like, I've been watching the markets for 6 years, and that's not really how it works. And obviously, some of that is because a lot of the TPO profiles were done on the equity side, but not many people have actually applied them to crude oil. So this is where the Market Stalker's method came in, to effectively try and apply the profile that maybe wasn't applied as heavily to things like crude oil and gold as it was in ES. So for example, in ES, if you see a failed auction and a value acceptance for the early part of the day, both of those setups are very valid. However, in my experience, if you see a value acceptance on crude oil pretty early in the day, most of the time that's not going to be valid. It actually has less than 20% of chance working out during the first hour of trading. But once you get to the second part of the regular trading hours, the value acceptance setup becomes very, very possible, right? So, things like that, they're kind of differences between products. And I just felt that I needed to get all of that out, all of the knowledge that I was acquiring, and people kept asking me about it. It's like, how did you know this? How did you know that? How did you find out that, the crude oil likes to reverse there? Why the options expiries at a particular time of day? Why Canadian dollar? And eventually, to maximize my time, I started putting things up on YouTube. And then suddenly I started getting a ton of people who just came to the channel and wanted to find out where they could learn this stuff. And at the time, I didn't have anything. I just had my colleagues. The reason why I put the videos up was to explain to all of my colleagues so that I don't have to say it to different people, 12 people, but to keep saying the same thing to them. So I was like, I'm just going to chuck it up. And if they ask me something, I can just point them to a video. And then I got like wallpapered with emails after that going, where do I buy this? Do you have a course? What about a book? Do you have a book? And I'm like, no, I don't. So that's how my YouTube channel came about. It was sort of something I sort of fell into. It wasn't like, I'm going to become a YouTuber. It was never, an intention of mine. I was always just a trader doing my thing, whatever. And then people just getting interested in it. And I think most of us, that's how we get to this level where you just got to fall into it. Desmond Menza says, how would you trade gold? I would trade gold exactly the same way, right? So it is my market stalkers method. It is time of day. It is the setup based on profile, average session ranges, and certain option expiries. Gold also has options, right? So you might be able to utilize gamma exposure levels there too, just to give you some more guidance intraday. But it can be a little bit difficult to sift out like what exactly is happening. It is a very complex data. So I kind of shy away from actually telling people about that. But generally it's to do with average session ranges, gamma levels that we might see as magnets, Asia high, Asia low, London high, London low, and then just looking at the TPO profile, whether it is giving us the failed auction, sustained auction, or neutral day type. So that's basically the premise. Joe Chikungal says, gold is pulling back to IB high. Do you consider that level to lean on to go long? No, it is too early. We have COMEX later, and we have a whole bunch of stuff this week. I will not be doing breakout trades, which is what the initial balance high test really aims for. Is basically a breakout of initial balance, then a pullback, and then a further long. We have FOMC. I doubt that we're going to have some big crazy movement before then, because everybody is going to be looking for things like that. So if I'm going to be looking for setups in gold, I want to look for a failed auction long. So I don't want to be going against the trend. That would be a little bit silly at this point, seeing how we've just made all-time highs. And even though there is a possibility that the upside maybe doesn't yet have enough power to push even higher, I still want to be on the long side, but not here. I want to see it sell off and then maybe look for some more logical levels to buy gold. David Walsh says, Dee, were you mentored to trade crude, or did you just figure it out yourself? I was mentored by quite a few people, actually. So the first company immediately would have a risk manager, but also senior traders that were sort of around us. And then after that, I wasn't quite happy to kind of stay where I was with the knowledge, and I sought out more people, and then I came across Topstep immediately. Like, I became their funded trader in 2015, I think it was, and then I immediately saw that Hogue was doing his market profile lab, was called back then, and I immediately signed up for that. So he was the one that was guiding me through. Like, he's not like a core crude oil trader, but he knows so much about it. So it was a pleasure watching him express the views, and he was so amazing. Like, I used to bother every one of my mentors with like a million questions, and I'm pretty sure that maybe he's such a nice guy, right? So I'm sure he doesn't want to go, God, he was so annoying. But I did like wallpaper him with questions. It was so funny. However, then on the other side, he was the risk manager back then, and we had like a little private messaging thing. So over the day, we used to like ping messages and stuff, and then we kind of developed a friendship from there. And we were both musicians, and it was just I don't know. We just had a lot of common points and common interests. And we just spent a lot of time chatting, and that's how we got to know each other. So yeah, Hogue was one of my big mentors, and he remains my mentor to this day. I have nothing but respect for Hogue. He's one of the nicest people that you will ever come across in your life, and trust me, that's not that's not the norm. Most people are not that nice. So in order to, just clean out your environment and stuff, you need to seek out genuinely nice people. I'm very careful who I let into my spiritual environment, and it's a pleasure that I get to work with Hogue on a weekly basis. It's just, it's beautiful. It's a dream come true. And then all the other guys with Topstep as well. We have such huge characters, and they're all genuinely nice people. It's not like you have some, dodgy people. And prop firms are rife with suspect characters. However, TopstepTV, genuine people who actually want you to succeed. And yes, it's a business. We all like money. This is why we're traders. But there's a way to do business in the right way, and there's a way to do business in a completely wrong way. And then you have scum of the earth sort of people. Yeah, so, pick your battles. I think that Topstep is providing an amazing amount of education for everybody, and we should be very grateful. I mean, this sort of education you wouldn't be able to get back in the old days. Like, who the hell would sit for free on YouTube and just kind of impart knowledge? It's like, and spend 8 hours. Well, actually, if we take in slow markets, London session, at the buzzer, we actually probably have about 10, 11 hours of broadcasts throughout the day. Where do you find that, And it's all professionals who have traded for a very, very long time. Everybody, and, including Andre, like Andre gets a lot of stick, but Andre is actually a very experienced trader. I know he gets excited, but everything that he says, you can see that it's coming from experience. It's not coming from, I'm just a newbie, I know nothing. Like, he was a spread trader, and typically they have a very different strategy, but everything that he says about risk, the fact that when he was trading accounts, he was very controlled. He never did like over trading a million trades. You always saw Andre do 1 or 2 trades, right? That was it. So, just be very grateful for what we have as resource on TopstepTV, okay? And, if I had this when I started, I wouldn't have needed to go to a Chicago prop firm because I would have one on YouTube, right? So, yeah, it's fairly special. But, yeah, I learned in prop firms, basically, and now you have exactly that here. So just listen to TopstepTV. You don't have to, like, we're not a signal service. You're not supposed to watch TopstepTV and take the same trades that we do. But definitely look at it from a point of the education, how we talk through the trades. And actually talking through trades that didn't work is a lot more beneficial than the ones that did work, because, the ones that worked, it worked the end. Not much to derive from it. Maybe you can take in like, that's a stop loss, that's this, that's that. But generally the idea worked, It's like we had a level, we got the bounce, or we got the springboard price action, done. But if a trade doesn't work out, it's like, did we miss something? What did we miss? And that is the kind of discussion that you need to pay attention to, especially when, we're doing the house account. Because sometimes, people are like, the house account is shit. It's not. It's a way to take in a whole bunch of people's levels and then to see if we can get a good trade out of it. And if not, why didn't we get it? How can we improve this process? And it's a never-ending improvement process. So, it's packed with education, right? And we never used to have that. So it's a huge, huge resource. All right, let's take some more questions and then we're gonna finish it up. No trades today because I don't see anything obvious. Like I said, I don't want to rush into things. I'm seeing that the crude oil might be coming into somewhere nearer the Asia low, but we're still not there yet. So 68.65. 68.65 is Asia low, and that's exactly where I want to look for potential longs or potential shorts, because we still held the initial balance high. So that's what I'm looking for. Okay, let's see. Shane A, what is more valuable, value high, value low, or previous day high and low? There's so many points to look at. Personally, I like to see the overnight open as well. Shane A, so Shane, I will say that's a matter of context, right? So if we are opening inside previous day's range, so we're inside yesterday's candle, previous day high and low, they're not that important to me. However, where was the distribution curve, the outer value edge, and here's the distinction, outer value edge, okay? Inside value open, and then trying to use value high, value low for support resistance, that's not really the way you use value. But there are products that work better doing that than others. Crude oil, terrible. It will not respect it. And in fact, most of the times it's going to go outside of value and then do something that we call responsive short or long, meaning that the market makers try to get it out of the distribution curve and then they sell it or then they buy it, right? But if you're looking at gold, for example, gold will most times act inside value as value high, value low. But if you can find a confluence level like Asia high, Asia low, 30-minute supply from Asia, that can lend itself pretty well to give you confluence. Now with the outer value edges, they are very, very reactive. A lot of the times, if I'm saying on ES we open outside of value, even though we open inside yesterday's candle, so days high, days low, doesn't really make much sense, right? Because we're inside yesterday. But the distribution curve is going to be elsewhere. So the value area might be lower or might be just under the area inside the candle. That is a lot more interesting to me on that kind of a day than the previous day's high or low. So it's a matter of context. If, however, we open vastly above and outside the previous day's candle, then obviously yesterday's high, for example, it becomes very important, right? Because we're above the whole area. So where's your first price point? Previous day's high. A lot of people will be looking at that. A lot of hedge funds will be looking at that level, right? Now, if we don't manage to get any kind of a meaningful trade out of that and the price keeps going lower, the next point of interest is going to be the outer value edge. So if we're opening above, we didn't do anything around the day's high, keeps going down, next point of reference is daily, previous day's value high. And then I also have my average session ranges. I also have the gamma levels. I have like a whole bunch of other things. Time of day are we actually doing something at the time of day when we're supposed to be seeing, reversal? Like, for example, in crude oil, we used to have the Forex option expiries. Now that's slightly changed because now we have the new options expiries for crude oil, right? That are slightly different. So all of that will play into whether the previous day's high and low are relevant price points. So hopefully that makes sense. All right, one final question and then we're going to finish it up. How do you find gamma levels? Well, you have gamma options walls that you can find just by looking at CME. However, there is a lot of information there. So I would probably look for a service that is usually, like, I'm not an affiliate of any of those services. So whilst you can derive which level has the most gamma exposure, it's quite a lot of data to go through. So maybe something like Mentor Q would be a good point. But even so, don't forget that gamma levels are not your support resistance. They can be springboards as well. So it's just like we use weekly kickoff high and low from Hogue. It's the same thing with gamma exposure levels. Yes, they can act as support to resistance, but they can also act as a springboard. So you have to decide which one, right? You have to be the one who's like, contextually, this would make sense, or contextually, it doesn't make sense that we stop here. So therefore, I'm just going to look at it as a springboard, and then you watch what happens, right? So it is a lot of data to go through, but that's the nature of trading, right? If this was easy, everybody would be millionaires. In the end, you have to decide whether that's something you want to look at, whether you're at a point in your journey where that would be useful for you. Because just remember that when you're watching all of us on Topstep TV, a lot of us have had at least a decade worth of experience, maybe a little bit less for some people, but they always come from like a tech world or, some kind of an engineering background. There will be something there in their brain that will allow them to think in a faster way. In other words, they have transferable skills from elsewhere that allow them to reach the skill level faster than most. So whenever you're watching us, it's always a result of 10, 15, 20, 30 years of trading experience. So it may seem that Hogue uses very complex data, open interest and TPOs, and now he's also using VWAP and support and resistance and supply and demand, and he seems to know all of that. Yes, he knows all of that because that's a combination of 30, 40 years of trading. And similarly, when you look at Dakota, he's had 15 years of staring at charts and trading. He started very young. And, to him, some things are simple. But like I said to him on Friday, I said, you say, keep it simple. And then you do things that are not so simple. And then he's like, yeah, I can sort of see that. Because in our heads, what's simple to us may not be the same that's simple to a novice trader. So for me, looking at a gamma level exposure is just another thing that I see on the chart. But it might be absolute overload if you're at the beginning of your journey. So be careful of overload. Find something that you sort of had some consistency with before you start adding more things. Similarly, if something is not working, you need to take out one thing, add one thing, and then see how that fits into your current methodology. One thing you don't want to do is to change everything at once. I see many people throwing out the baby with the bathwater when they're trying to improve their strategies. They're like, now I'm not going to look at anything that I looked at for the last year. Let's just do what Hogue's doing. Let's just use TPO profile. No, use whatever you're using already and see if you can add on to that, okay? Especially if you have something that's already made you pass an XFA, pass a combine, get to a funded account. Don't throw everything out. It's like such a slippery slope. And it's one of the main causes why traders fail as well. Too much strategy hopping, right? So you need to change one thing at a time, give it enough time to see whether you do gel with it or not, and then move on, or then add on to things. It's like that old advice: don't try to move house, have a child, change a job, stop smoking, and get fit all in one go, right? You need to do one thing. It's too much. So same thing in trading. Don't try to do all of that. Don't try to change everything. Change one thing at a time. I'm going to leave you with that today. Enjoy the rest of the broadcast. I'm just going to see whether I've got some plugs here. I'm pretty sure I probably missed some. Let's see if we've got anything new. If I can open this, oh no, it's going to make me, okay. I need to verify my thing. I should have opened this before. See, after the weekend, I'm all a little bit like sleepy and stuff. And I'm like, oh yeah, I need to take a look at the Google Doc. So let's see. I mean, hopefully we're not going to have too much. So tip of the week is to stay disciplined, obviously, especially on rollover weeks. Okay, so just 3 things. Casting call. If you want to come hang with us, if you want to come and trade with us, we are looking for traders who want to come onto TopstepTV to trade with us and to share their story. Now, everybody's welcome to apply regardless of experience. So you can get your name in during the main broadcast. There will be a link that Eddie's going to tell you when to sign up. So if you want that, if you want to come and join us, get your name in and get your shot to come and trade live with our crew. Obviously, we have Topstep Discord. If you're struggling, we have plenty of coaches in there. If you want to interact with the Topstep community even more, that's the place to be. And then Topstep TV Instagram. So they're doing some behind-the-scenes stuff from their recent company retreat. Now that's going to be fun. Looking forward to that. So follow them on Instagram. I am going to drop that link in the chat. I always enjoy seeing those because they're just like such fun things. Okay, Instagram, Topstep TV. So check that out. Follow everybody on Instagram. It's going to be awesome just to see them all relaxing and everything. And yeah, to just see how TopstepTV winds down. That's it, guys. Thank you for being here with me. Make sure to press the like. And if you're not subscribed already, do subscribe. We have a lot of stuff in store and constant innovation and new things coming up. Enjoy. So I will see you tomorrow for another session during London. Take care.